Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
Good morning, everybody. Happy New Year, and welcome back to the first live stream of 2024. Good to have you guys here with me. We got 150 people tuning in, and I just want to say, if you haven't heard me say it already, Happy New Year's from myself and the rest of the team here at A1. We are looking forward to being back in the saddle here for a new year, taking a look at markets together, talking setups, talking trades. My first trade of the new year did not go so well. I went long gold, and you can see price is just trading lower here as we get started on the trading day. I do not have any position open, but I did try to go long here, and I want to talk a little bit about that. Let me pull up my pin here for us. Also, it's a little warm in this room. Let me take the jacket off. So, first of all, as we kick off, first stream of the year, let me just say thank you for being here with us. We will be, of course, streaming. Nothing is changing. New year, same stream, right? We got the confetti popping because we are looking forward to a new year. I mean, the thing with markets is that New Year's can sometimes cause some new trends. And if they do start to unfold, we will be here to watch them. Speaking of new trends potentially forming, I want to take a quick look at the indices. Look at this, guys. We've got a big sell-off on our hands. Well, let me back up. Not quite a big sell-off. I mean, if you take a look at the daily chart and then you zoom out a little bit, I mean, come on, the S&P 500 is still, up tremendously from its lows. But I do think that this is worth mentioning, that we're seeing a third day here of consecutive selling. And pretty much the second we hit the new year, we've seen some sell pressure coming into this market. Now, I actually sold my S&P position right around here. For those of you who have been watching consistently for a while, then you know this to be true already. I went long November 1st, and it was an incredible run for the end of my trading year last year. I was profitable throughout almost all year last year, meaning overall the net gain. I never really sunk into negative territory in 2023. However, the last 2 months or so of 2023 were absolute game changers for me, with the S&P 500, the NASDAQ, and the Dow all rallying. In some cases, Dow and NASDAQ hitting all-time highs. We rode that move, and we caught the whole thing on camera on these live streams. So it was kind of a cool historic moment to watch that, run up off the idea that rate cuts were coming. But now we've got a new year on our hands. And I think New Year's brings new challenges, if I'm being completely honest, with markets. I don't think that this market is just set to go straight up forever. I'm a trader after all. I am not, the vast majority of what I do is active trading, active short-term investing. But for the most part, I think that this market has more room to come down. No, I'm not a bear by any means. Do I think this market comes down, significantly? No, I'm not really in that camp. But I think overbought is a fair thing to say when you get 9 weeks straight of straight up move on the S&P 500. You could say the same thing for the dollar traders out there. Take a look at the dollar index here today, guys. Dollar index saw on a weekly chart just a massive slide, and arguably was a little bit oversold, right? So then you ask the question, is this a buy now? Are we bottoming out on the dollar index? And I personally, I don't think so. I think that the dollar index has room to come down. Here's a 4-hour chart, and I'll show this to you. I think that in the short term, however, this is a hard market for me to sell at current levels. You take a look at the dollar index. For those of you guys who are trading currency crosses, whether you're trading gold indices, this is a headwind for us if you are bullish. Now, if you're bearish, euro dollar, pound dollar, you're having a great day, right? Or a great start of the year. If you're bearish gold, you're having a great start of the year. Here's the thing. This dollar index strength, this is what happens when you get kind of a straight shot move. When the revival, when the reversal finally starts to materialize, you get some strong moves. And so we're getting a strong move. Dollar index is moving higher. Am I bullish on this? No. I think the rate cut story is still intact. Disinflation trend still intact. Nothing dramatically has changed to cause me to be suddenly a dollar bull. Now, if inflation starts to change, if something in the narrative starts to change, I'll show you something. Here's something to consider in terms of inflation right now. We'll do a little quick inflation study. We'll take a look at the dollar index just in its isolation. Take a look here. The Fed wants it to be at 2%. Okay? 2% is the Fed funds target for inflation, guys. That's what it's going to take for the Fed to stop rate hikes and get into the rate cut territory. They don't want inflation under 2%. They don't want inflation over 2%. They want it just right. And 2% is their target. So in that case, what we see happening is that we've taken this ride together on this channel. We've covered everything going on for years now, obviously, but we've covered this whole rate hike cycle, which the rate hikes did seem to have some effect. We now see inflation coming down meaningfully. The question now for markets is inflation going to bottom out and start coming up again? In which case we have a huge problem on our hands and markets will sell off dramatically. You probably see gold down huge, S&P down huge. Or inflation this year, does it continue to moderate and come down to that holy grail 2%? That's the question that we have on our hands. Fundamentalists, this is what we are watching. Inflation is a huge metric for us to watch. So is jobs numbers here on Friday. By the way, NFP Friday, 2 days from now, we will be streaming the NFP event. If you want some more live coverage, I just want to encourage you, make sure to hit that thumbs up button and subscribe. But we are looking to this data to continue to confirm this idea. Now, the Fed meeting, FOMC, I'm sorry, not the meeting. We have meeting minutes, okay? What we want to see is what I just illustrated. For what do we want to see for FOMC? We want to see that the Fed still thinks that inflation is coming down meaningfully and will reach its target in a meaningful amount of time of 2%. That's what we want to see. Okay. So that's a chart for you in preparation for today's meeting minutes. I will be back live streaming for FOMC this afternoon. We'll come back on. We'll cover, we're going to do PMI numbers here this morning. Is it PMI? Hold on. I think it is PMI. Yeah, PMI and JOLTS jobs openings both coming out here today. We will be streaming up to that news in 20 minutes, and we'll be streaming later today for the meeting minutes to see if there's something that meaningfully comes out of that. But again, charts that I'm looking at today, keep an eye on the inflation study. Are we going to reach the 2% target? And I have my sister, Julie, she does our marketing. She's watching this stream right now. This is the chart to share today, Julie. She does our Twitter, by the way. If you're not following A1 Trading on Twitter, we put out charts from the EDGEFINDER, studies, research. I'll tell you what, one of our company goals in 2024 is we are going to overhaul market data. We are going to make market data more accessible to the average trader than ever before in 2024. That's the goal. The goal for A1 Trading, just so we're clear, we are going to deep dive, double down, triple down on data for you guys as viewers, as customers who support our campaign to build better software tools And yeah, thanks for your help, Julie. Yes, between Julie and Frank, they do a great job. I'm the video guy. Julie and Frank are more the readable contents team. So when you guys read along with our newsletters, if you're on the email, if you're in our Telegram, again, there is just free value galore. And we expect, here's two things that we're coming more. Two things coming to you in 2024 from A1 Trading. More market data, three things. Actually, two things. More market data and better content than you ever have seen from this YouTube channel and our readable content. More free stuff, more helpful resources, more education for free. The name of the game for us in 2024 as a company is more market data and more free value to our followers. You guys are the reasons that we can do this stuff, the reason we can have a show, the reason we can have a staff of people. I very much appreciate you guys as fellow aspiring traders, and as an audience. We are thankful to have you. And so 2024, we are going to be doing more for the community than we ever have, and we're going to bring more market data to the average trader than ever before. Okay. Julie says, thanks, guys. And I'm also the funniest. So highly debatable, but you can give Julie a test to see how funny she is by following us on Telegram. Chandler, if you don't mind just dropping the link on Telegram. Julie runs our Telegram channel with Frank's help. They both are putting out daily trading ideas, market data for you. So if you want some of that free resources that's coming to you, there's the link, guys. Click that free link right there. Join the Telegram, and we will keep you entertained as well as educated throughout the year. Okay? Feds are not cutting rates yet, guys. Everything is correcting. And so that's an argument. I think one thing you could point towards with the dollar index moving up like this today is you might say, well, markets were a little overestimating rate cuts. They chased the rate cut story into the end of the year, and now they're somewhat correcting. Now, I will say, I love to see this. As an index bull, I needed this pullback. I haven't been able to trade the indices, right? They're too extended in my view, and now we're finally starting to see. I pulled up the weekly chart here. Take a look at this. I pointed out on my Twitter that price was getting a bit extended, and I'm very glad that I have not been chasing this move for this very reason. We printed overextended, and the last time this printed, this was a wonderful time. The last few times that this has printed, it showed that we had moved beyond our means and that it was due for a corrective move. I think the S&P 500 has more room to come down in the meantime. We had 9 straight weeks of bullish momentum. It doesn't mean we can't have a 10th, but it means, in my view, that it's a reasonable thing to say, let me just stand on the sidelines and let me just wait for a better opportunity. By the way, the indicators that you see on your screen, this is as part of our plan to load out more software than ever. We've got a link for us here. Chandler or Julie, if you guys could message each other. Julie has the link. If Julie, you send the link to Chandler. I don't know if Chandler has the link, but we have an early access link for this that maybe we'll drop in the chat for you guys. The A1 indicators will be coming soon. In fact, they drop in 2 days. So if you want our trading view indicators, all the information you'll need to get access to those is coming out here. We're going to drop a link in there in the chat in just a moment for you to get early access to that. Again, we see the NASDAQ coming down meaningfully as well. Here's the NASDAQ on a weekly chart, but if we take it down to the 4-hour, you can see meaningful sell-off here, right? Bit of a topping situation here. And we see this market continuing to roll over into today's price action. Markets just opened up. We're coming into PMI numbers, JOLTS numbers in about 15 minutes or so. Again, we'll have that link for you guys in just 1 second for those of you who would like early access to the A1 indicators when they drop for TradingView. Even the Dow seeing a little bit of sell-off. The Dow did it outperformed massively yesterday. Idea being a little bit more defensive stocks holding up in there, while the higher tech, higher risk names saw big sell-offs. You take a look at gold as well. Gold really selling off here today. In fact, gold selling off more so. Sorry, my trading view is freaking out. There it goes. Gold selling off more meaningful today than even the indices. Same with silver. Look at silver, guys. Silver flying down. And again, I was bullish on this. So let me point out where I was wrong. I thought that we would hold these areas. I really, there was a good bounce off this level. Price came back in. And when it broke through the lows, I went ahead and stopped out of this idea. But I am still bullish on gold going in. But for now, price action has shown me that it is not wanting to move higher. You know, in hindsight, obviously, a little bit of a head and shoulders forming here. But to me, when it comes to, you know, by the way, there you go, guys, there's the indicator early access. If you want access to our trading view indicators when they drop, make sure to click that link and that will get you early access. Someone from our team can also connect with you to make sure you get the biggest discount available for our New Year's sale that we're doing on our new trading view indicators. So yeah, should be fun. I'm excited to get some feedback from people as they get the indicators. So, okay, so top setups going into this week. By the way, like I said, 14 minutes to go before we get into PMI and JOLTS numbers. Overall, let's go ahead and knock out the neutral readings. We'll isolate our watch list here a little bit today. We got gold bullish setups. I'm waiting for price action signal before I can follow anything there. Bitcoin still bullish. Dow and NASDAQ both bullish. FTSE and the S&P 500. So still bullish indices and bullish gold. But let me jump out in front of that. And this is where the EDGEFINDER is not, nothing is a holy grail, but the EDGEFINDER helps us to source a lot of data. It's an algorithm essentially that pulls in market data all across the page here. Everything from labor statistics, which we get NFP on Friday, which will update and tick these numbers higher or lower depending on what we get. The algorithm automatically reads in the data and interprets whether it's bullish or bearish based on our own kind of understanding of the markets here at A1. We've programmed this algorithm to help us spot bullish and bearish opportunities in the markets. The EDGEFINDER has been very, very, very correct about indices and gold in the recent weeks leading up to this. We are now seeing the indices pull back, and I actually love that because that might finally give us an opportunity to play these again. You know, for me with the S&P 500, what's my pick? Well, right now NASDAQ looks pretty interesting, but NASDAQ has had a huge run, so I think it's due for a bigger pullback at this time. Here's a look at the daily chart. Again, if you're looking at the daily NASDAQ chart, possibility that we get a pullback all the way down to like 16,000. So we have room here to come down. And for me, whether we get all the way down here or not, the more important thing is when do we start to actually bottom out on like the 4-hour chart where we can actually see like, you know, meaningful higher lows, higher highs, that sort of thing. Overall for 2024, I am optimistic for indices, but I do think that it's okay to also point out when, you know, something is overextended. It's okay to kind of step back and say, well, hey, these things are a bit extended. Let's wait for a pullback. Again, I was totally dead wrong with my gold idea, but I will be same concept. I'll be looking for higher lows, higher highs, something to show that gold has found support. I would like to see also gold really not cross below 2000. I feel like 2000 is a big psychological level, which is, you know, far away, but gold is moving quick right now and volatility is pretty high. Here's a look at the daily chart for gold. Finding some resistance up here at 2080, selling off and coming back a little bit here today. How about an A1 indicator tutorial video? Great question. I think we have 4 of them created and they will be loading and uploading to the channel. We worked ahead on that before the holidays. So we've been programming the tools, and on the content side, we've been prepping so that you guys can actually understand how the tools work and that sort of thing before deciding if you want to get them or not. But again, just a reminder for indicator early access, the indicators that we're referring to are the new ones that we've been building for for TradingView, if you're a TradingView user and you would like access to our new extension zones as well as our momentum indicators, these will be coming to our website, a1trading.com. They'll be coming in a couple days. And if you'd like early access, you can get it as soon as Friday by using the sign up link that is in the chat right now. Okay. So there is some information. I almost forgot how these streams work. We do have to thank our sponsors really quick. To make these shows possible, we do rely on our wonderful sponsors, highly reputable businesses in the industry. We are sponsored by Eightcap, Forex Tester, and FX2. So if you would like to hear more about some of these setups that we're talking about into New Year, stick around for just a minute. We're going to take a quick break to thank our sponsors. You can hear about how you can get some free stuff with our sponsor, Eightcap. So check it out right after this. We'll be joined with Frank to take a look at some markets from here. Check it out.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right. And we are back. Let's bring in Frank so we can say hey to him. Hey, Frank, what's going on, man?
Hey, how's it going? Sorry about my hair. It's a little messy this morning.
No worries. It's a new year, new hairdo. I like it.
Yeah, not for long. But
yeah, Frank, so we are first stream of the year, and indices are all selling off. Have you looked at what have you been thinking of all this sell-off in NASDAQ, S&P, Dow, and even gold and silver?
Not a whole lot, really. I don't really think anything of it. We hit our March 22 highs on the S&P, which was a pretty big level, and it doesn't surprise me we're selling off, at least early in the year. On the week, we're not even down 1%. So, I mean, this doesn't look like anything concerning. I'm actually kind of glad, just so we can finally see some pullback. Because look at these past several weeks have just been nothing but green. So I figured if we just wait on it and see what the news says this week, because we got a lot of stuff, could be potential. But yeah, I'm on looking at longs for these, same as usual. In terms of jobs numbers, JOLTS doesn't really matter to me as well. But I would say the meeting minutes is going to be pretty important as far as jobs numbers go, not JOLTS, but what do we have? We have NFP, right? Yeah, we have NFP on Friday. So I think at this point, if we get the talks of rate cuts, if that continues in meeting minutes, I don't know. I think we want to see higher non-farm employment change. Like, we want to see better jobs numbers and dovish talks from the FOMC. JOLTS is not important, like I said, and PMI want to see expansion. So that's where I'm at right now.
Yeah, and I definitely agree with you with the indices. Another topic is that the dollar index seems to be breaking out here. Again, you had this like straight shot down into the end of last year, and now we start seeing. I mean, these are big candles. You're seeing some big pushes to the upside on the dollar index, and it seems to want to short term keep going. I guess one thing you could argue for is that there was that end of the year chase for a lot of asset managers, hedge funds. They wanted to partake in the rally, and so the train was going towards risk on assets. And I'm kind of with you. I don't necessarily think that this is a huge change in what we're kind of expecting for 2024, but I think it's fair to say maybe this is just a little bit of a relief push on like the dollar index pushing higher. And now we're starting to see some of those risk assets adjust a little bit. And notably, Frank, I added this little section on my trading view so I could take a look at sectors specifically. And what we saw yesterday was a big drop specifically in the technology ETF or sector within the not the EDGEFINDER, within the NASDAQ. So of course, NASDAQ led the fall yesterday. It was the big names. It was your Apples and Amazons and Googles. The big names took a tumble. And so I think that is particularly interesting as we kind of go into the new year. But I think that I'm definitely with you. Markets went up for 9 weeks straight. It's probably due for a corrective move, and that could be anything from a 3% pullback to a 10% pullback. And I still think that the overall story is still intact. Inflation's coming down. Sure, you might get a little bit less growth, and that might be the story. The concern might be companies are not going to do very well this year, or less well than last year, especially with how much markets pumped into the new year. It's possible that things just got a little bit expensive, and maybe we see just a corrective move in the first couple months. We'll see.
Yeah, I agree. I think something happened with Apple too. Is there something about iPhone demand?
I think that what happened with Apple is there's some drama about their Apple Watch. There's like some limitations. Also, Apple, I believe, is trading at like a 30 PE. And I just happen to have been listening to someone speak about the 30 price to earnings for Apple has historically been a time to sell Apple. And so it's possible that just Apple and a lot of these big tech names are trading at just very rich evaluations. And the idea of rate cuts is making markets excited, but there's totally the possibility. We know how markets can be. They can get overexcited and overestimating when rates are going to come down. And that extends to the yield story. We see yields trading up a little bit. You see the dollar index, like we mentioned, possibly finding a short-term bottom. But I think it should be interesting. Are there any currencies that you're watching right now, Frank?
Yeah, I'm going to continue to watch UJ. I took a couple short positions on that last year, as in like last month, but I'm going to just keep looking at shorts on this. The dollar is just not, in my opinion, is just not strong. And UJ, especially because Japan is different now in terms of monetary policy. Now that they have introduced that idea of raising rates. And that is still a question of whether or not they're going to do it. But the sort of shift in talks of that, how the U.S. is talking about cutting rates, Japan is talking about hiking. It's the same old story we were talking about a month ago, but things haven't really changed in terms of that. So I'm just looking at dollar shorts for the most part, risk off or risk on longs.
Yeah, I think that's definitely an interesting play for the new year. I think the yen has been so beaten down. If there is a bigger reversal, and I think also a lot of the carry trade unwind, which is the idea of like people buying or shorting, borrowing from places like Japan. The Japanese yen is like the most favorite borrowing currency. People short it and then they go buy like the pound or the Australian dollar or the US dollar to collect a yield. It's the classic carry trade. It's probably one of the most popular forex trades used by millions of people. That has been 2023 was a wonderful year for that. You take a look at like the daily chart. I mean, 2023 was a wonderful year for shorting the yen and buying something else and collecting a positive yield. And it's possible that trade is losing its appeal, especially with these rate cut ideas. If they're gonna cut rates, that takes the carry out of the carry trade. It takes out the positive collection that you can collect on that, which I think if that unwinds, the dollar yen could drop hundreds and hundreds of pips. So we'll see how that plays out. But
have you seen
should be
what was
interesting to
going on
see.
in Japan recently on
No.
the news? So they had like a 7 point something magnitude earthquake somewhere in
Oh, I did
Japan.
see that. I saw that on like Instagram or something.
It wasn't in Tokyo, but it was still, I think, pretty devastating. And they also had two planes collide
What?
on
Oh,
the
isn't that the plane
right
that like
before
was
the
on
run.
fire or something?
Yeah,
Oh my gosh. Yeah, I saw
all
that.
of the passengers got out of the commercial plane though, I believe, which is
Yes, I
good.
think
But
that's right, which is good.
that's Japan's going through it now.
Yeah, for real. So we just had data come in, by the way. We had JOLTS job openings come in pretty much exactly as expected, and PMIs came out 0.2 higher, so not too significantly higher. JOLTS, the previous number did get revised slightly. So this is not too market moving. We see on the like 5-minute chart, dollar index selling just slightly. You also had a pop on the S&P and then reversed it immediately. Gold did trade higher. Let's see where this is showing. You had manufacturing prices come down somewhat meaningfully from expectations. Look at that. Manufacturing prices came down 45.2 compared to 49.5, which was forecasted. That's a pretty significant move there. Doesn't seem like too market moving outside of gold and oil. Look at oil, by the way. Oil trading higher this morning.
Yeah, that's a crazy move actually.
I think one thing, Frank, that could continue to, if the S&P and NASDAQ are going to keep coming down, I think one of the things that could propel that further lower would be oil prices rising. One of the reasons that you kind of got this like perfect story into the end of the year, for those of you guys who aren't quite familiar with the way oil can impact markets, oil, think about it this way. When you go to the gas station, you're paying a lot more for gas, and everyone the magnitude that it has on an entire population means that they have a lot less money in their pocket to spend, and that means that the consumer becomes weaker. That's not so great for stocks. It's also not great necessarily for the economy just to throw money into a commodity at a higher price. So oil came down like a lot, and that helped with the stock market rally that we saw in November through the end of the year. If oil prices find a bottom here and they do start to come up, that could actually be a negative pressure as that reintroduces that pressure on the consumer. What do you think about that, Frank? Do you think oil prices, I mean, they've been so beaten down as well. If that rises, that could actually kind of tick up inflation a little bit, right?
Yeah, they're very correlated. Inflation and oil is, kind of the same thing, I guess. Just higher prices.
Yeah.
And that's that's a big consumer item that everyone uses. So yes, that's definitely true. I was looking at gold though. I wish it would come down a little more. But it's reacting pretty well to this news initially. But I think it's still, if it could come down to this trend line, I think I would honestly want to get in, but it may have just missed it. So we'll have to just keep looking at it.
Frank, I definitely like, I put out kind of my outlook for 2024 video, and I'm definitely on the bullish camp for gold going into this year. I think that, with possible economic slowdown, with rates likely to come down, that environment could be really good for gold. And I think that gold hasn't seen nearly the same love that the indices have, and I think that we talked a little bit about how maybe things are a little too optimistic for stocks, and that's why we're seeing a little bit of a pullback. But I think that leaves room for gold to see a little bit of a boost this year. So I will definitely be trading it. I'm sure you will as well.
Speaking of gold and Bitcoin. I think Bitcoin's got its year this year, but don't take it from me because I could be very wrong. But it had a great year, and today was a really bad day, but that's just how it goes sometimes. Like you'll see these 5% dips in one day, and then it'll be coupled by these higher levels. I was saying in December that I think by the end of December it would hit 48, which it obviously didn't. But I still think 48 is a good target for it, just because I'm not going to zoom out, but it's a very it's like a very obvious level. It's a previous high from last year, I believe, or 2022. So yeah, I think Bitcoin is going to do well, especially with
So Frank,
monetary policy.
do you think you'll be trading Bitcoin, or are you more talking about maybe swing trading longer term, or what actually would you do with Bitcoin? Would you be looking to buy it on dips? What are you thinking?
I don't necessarily believe in Bitcoin in the long term as like a long-term investment in something that holds the same value as, let's say, a stock or gold. But I like trading in that direction if I see the upside, as in if it's dovish in like Fed sentiment and stocks are doing well and gold is doing well. Bitcoin is like the leveraged version of that. So it's a good way to trade, but once you trade it, it would be probably best to take your profits when you get them, and then wait for another opportunity, because it's not just going straight up like we saw in 21 and 2018. You'll just get these pops, and then one day like today will just be a huge dip. So this could be another buy opportunity for higher levels in the future. But I would say I'm probably going to just trade it in that direction.
Yep, that's totally fair, especially like you said, if you have kind of a more bullish outlook on equities or just generally risk sentiment. Bitcoin is possibly a great way to trade that and get some extra kind of extra reward for your risk that you're taking. Of course, like you said, it can have those big 5% drops. So I'm kind of in the same camp. It can be a trade for me, but I'm not really like a Bitcoin super believer or anything like that, especially when you kind of look at it and it's like 2021 was the year of just absolute pure risk on. Nothing could go wrong. And of course, we saw what happened with 2022. So you have to be careful with that stuff. But yeah, Frank, thank you for sharing your thoughts on everything. We went from the dollar to stocks to Bitcoin currencies. Thanks for coming on, as always, for dropping in. And I was saying earlier in the stream, Frank, that this year, 2024, big goal for A1 Trading is to bring more market data and more free content to the community than ever. And I'm definitely excited. We just listed out, I think I sent you a message just before this, just all of our software projects for this year. I'm definitely excited, and I'm sure you probably are as well, just to build bigger and better tools for everyone this year.
Yeah, it is exciting. You had a lot of them, so we're going to be busy.
I went crazy because I was like, you know what? We should just make the coolest list of indicators that you ever saw. So yes, that is going to be a fun goal and a lot to live up to in 2024. So Frank, thanks for coming on. We'll see you in just a bit.
Sounds good. Thanks.
All right. See you. There you go, guys. And again, Frank does a lot of our written content when you guys are in the Telegram channel or watching or reading through our newsletters if you're on our newsletter. Frank does a lot of that content. Again, we dropped a link here for the free Telegram if you'd like to join that. I wanted to point something out just to check real quick. Actually, I got to show you this. Some of you haven't seen this yet. I built something. I actually built this one. And, when I build something myself without the help of like the other developers on the team, it's a total gamble. It's either an incredible piece of artwork or it's utter garbage. I think that I might have found, now again, for like 10 things that I create, one thing is amazing. I think this might be one of the cooler ones. I built something here. If you're an edge finder, oh, and it's not even working. That's how you know I built it. We have a new indicator for smart money. It'll be coming back. It's probably being actually worked on. I hyped that up way too much just to let it drop. We have a new indicator. I'll tell you about it. It crosses smart money institutional positioning versus retail sentiment. Some of you guys have seen it, and I'll show it to you just so you know that it does indeed exist. That was a horrible fail. Yeah, that was an ouch moment. Julie is there to capitalize on my downfall here. I'm just kidding. But look at this. So this is what the tool entails. I know it's kind of hard to see, but it's a smart money versus retail sentiment indicator. And you know what? Actually, I didn't build this. I had some serious help, but we did. This is one of the things we've been working throughout the break. I was just building a bunch of different indicators and charts and stuff like that. But this is the idea. The idea will be that you can track institutional money versus retail positioning. What are they buying? What are they selling? And that, again, I promise it does work somewhere, but Julie said she's going to put a free one in the Discord pretty soon once it is working again, but probably just maintenance right now. Anyways, having the Edge Finder integrated with TradingView would be amazing. Yeah, it would be kind of cool. I would, we've looked into something of that nature, maybe embedding TradingView on the Edge Finder, something like that could be cool. All right, so let's see what else. I also wanted to have a quick look with you guys at retail positioning. We can take a look. Retail traders seem to be still very long the dollar Swiss franc specifically. We can add commodities in here. Let's take a look at gold. Gold kind of mixed. Retail is 45.55, but on oil they're very long. That's a little bit questionable. Indices. What about indices? Indices, retail traders are super short on indices. That is a bullish factor here. S&P, UK, 100. Where's the NASDAQ? Oh, the NASDAQ's not on here. US 30, German 30. By the way, I've been told that German 30 needs to be changed to German 40 because the DAX changed from 30 to 40 stocks. That is an update we need to do. One of the things here so far not working out is that seasonally, part of the reason I have been bullish on gold, and again, admittedly early to the trade, part of the reason is that historically, January is a positive month for gold. We still have time. I mean, obviously, it's only January 3rd, but gold is starting off in the wrong direction. By the way, look at that NASDAQ and S&P down pretty substantially here today. So I honestly think that the dip here on gold is an opportunity, but I don't like the price action just yet. For those of you who are looking to also trade gold, I'll tell you my thought. This candle is a nice start, but I'd like to see some sort of higher low, higher high. I'd like to see buyers step back in to this market. We're not quite seeing it just yet, so I'm waiting for that. So yeah, one took a loss on gold. We'll see if we can catch a better entry. If I take that trade, you guys will see it in the Discord VIP group. By the way, if you do want access to our data, I promise it most of the time is working. I have this one indicator that's not currently working, but if you want access to everything from institutional money flow in the COT data that we've built, if you'd like access to our top setups algorithm, if you'd like access to retail sentiment, we just added a new one here this morning. A treasury yield curve. We just added a treasury yield curve for your convenience if you're somebody who tracks treasuries, which we've been doing more and more on the channel, by the way. If you want access to all of this, we're handing out super big New Year's discounts. If you'd like to find out more information about that, here is a link. We're going to drop a link right now. There it is. Boom. Send us a direct message. If you send us a direct message and ask us for the New Year's discount, our team will hook you up with a super big surprise discount. But you got to message in, let them know that you're interested in the tool. Let them know what you're interested in the tool. What features are you looking to incorporate into your trading? What are you interested in most? Are you looking at, trying to find the top setups algorithm? Are you looking for COT data, smart money indicator, retail sentiment? economic stats, whatever you're interested in, let us know. We'll answer any questions you have. But the reason we ask you to message us is because each person that we sell a copy of the EDGEFINDER to, we want to make sure it's actually a right fit for you. That's why we encourage you to speak with someone on our team who is trained with the tool to answer your questions to make sure that it is a good fit for your trading. We want to help you this year to take your trading to new heights. Like I said earlier in the stream, our goal as a software company is to build bigger and better market data for traders around the world and make it more accessible at what we can do the best possible price for, what we have to do on the back end to develop it. We're trying, genuinely, one of our company goals is to build hedge fund level data and bring it to the average trader to help level up their game too. So if you'd like access to this data, if you want access to the EDGEFINDER and all of its features for a huge discount, all you have to do to find out about the secret discount is send us a direct message using this link, ask a few questions, chat with a representative on our team, and we'll get you set up with a copy to start out your trading in the right direction 2024. I think that's going to wrap up the stream here today. Do we have anybody coming on, Chandler, James? I'm not sure if we do. I don't think we do, but we have another stream happening later today, guys. We're going to be doing meeting minutes. So we went for 50 minutes here. We'll probably do another 30 to 45 minutes later. That's a wrap. FOMC will be back, guys. Again, if you want access, don't forget, there's the link. Send us a direct message. We'll get you super discounts on the VIP Signals group or the EDGEFINDER and all of its market data. Thank you guys for tuning into the stream. Have a wonderful rest of your day. We'll see you back at Fed meeting minutes later on today. Catch you soon. See you guys.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. Have a great Happy New Year and trade safe.